Williams percent range. It is basically a momentum indicator, which mainly calculates the high and low level of the price of a specific period and gives an idea about the latest closing position of the price. Hello viewers, in today's video we have come up with a strategy, and in this video we will share an indicator and also show how to follow a strategy using it. But please watch the video till the end. And today, I am with you in the whole video. I am an official member of FOREXBD. I hope you all are well. So let's talk about this strategy at the beginning. An indicator is required to follow this strategy, and its name is Williams percent range. You will find it in the trading view, available there for free. As before, you will come here and click on the indicator option, then enter its name in the search option and do search. Even if you search by writing just William, this indicator will come in front of you. You should search like this, and if it comes forward, if you click once, this indicator will be set up in the chart. You can see that our indicator is set up. If you look at the indicator, you can see the values -20 and -80. If the value goes above -20, then an overbought condition should be understood. On the other hand, if the value of the indicator falls below -80, then an oversold condition should be understood. But remember, this overbought or oversold price does not mean that the price will immediately reverse. Many people trade with the misconception, and this is a completely wrong thing to do. As a momentum indicator, it works much like the RSI indicator, but this indicator is primarily used to understand the strength of the market trend. How to use Williams percent R indicator. You must see that the market goes up once and once goes down and goes up again. That means sometimes the market goes uptrend and sometimes goes downtrend. This is the religion of the market. And we usually use indicators to understand when the market will go to uptrend or when it will go to downtrend. So today we will use the Williams percent range indicator for our analysis. One thing to notice is that when the market is forming a bullish structure, the middle line of the indicator is moving upwards. This line is called the percent R line. Similarly, when the market is in a downtrend, the percent R line of this indicator is going down. As we said before, if the market goes above -20, then the overbought condition should be understood. On the other hand, if the market falls below -80, then it should be understood as an oversold condition. But remember, this overbought or oversold price does not mean that the price will immediately reverse. We will analyze using this indicator and find our desired entry. However, if we look at the percent R line, we can see how it is moving with the market. If the line goes up, the market is going in an uptrend, and if this line goes down, the market is going in a downtrend. But we will wait here for oversold and overbought. Surely if the market goes below -80, then it will be oversold, and if the market rises above -20, then it will be overbought. So we will wait when the market goes for an oversold or overbought position like this. But there is another thing to do, and that is to set another indicator. The name of that indicator is moving average. Moving average will give you a very good support to use this indicator, so we will set the moving average in the same way. For that, as before, go to the indicator option, then search and set it up, but the period should be 50. I repeat that the period of moving average will be 50. The rules for using moving averages are the same as before. That is, when the market is above the moving average, then you will only take by entry. Note that when the market is above the moving average line, that is, the moving average is below, then you will only buy the trend. And when you can see the moving average above the market, that is, the market is below, you should take sell entries. Now let's see how you can combine these two indicators. First, you use the Williams indicator. If you see the market rise above the -20 level, then you wait, and when you see the market go above the -20 level, then turn back down and again cross the -20 level from top to bottom, then you will take the help of moving average. If you see that the market is below the moving average, then take a sell entry. I say again, when the market goes above the -20 level and goes down again by breaking the -20 level, if the market is below the moving average, then take a sell entry. Similarly, you can take buy entry like when the market goes down and crosses the 80 level, then you wait, and when you see it turn back and cross the -80 level from below, then you look at the moving average. If you see the market TS above the moving average, then you take a buy entry. I say again, if you see the market is above the moving average, then take a buy entry. Otherwise, don't take an entry. Hope you can follow this way. A great advantage here is that you can set up SL and TP with this indicator. How? Suppose you have taken a buy entry, then you can take TP up to -20 level, and you can take ISL as far as the market goes down. So you can set up these two things very easily. Again, if you take a sell entry, you can set up in the same way. Can get up to -80 TP on sell entry. But if you take TP up to -50 level, it will be safe for you, because most of the time the market comes up to -50 levels. Hope you understand the matter. So try it first and set up the SL and TP as we have shown, and then see what feedback you get. If you get good feedback, you can apply for real trading. We will have a question for you. Which level do you support for taking TP up to -50 or up to -80? Those who are watching the video, leave a comment now. Lastly, I have a request to you. If you still don't subscribe our channel, please subscribe and click the bell icon for never miss any update. Before finishing the video, let's take a look at the strategy shortly. First, you use the Williams indicator. If you see the market rise above the -20 level, then you wait, and when you see the market go above the -20 level, then turn back down and again cross the -20 level from top to bottom, then you will take the help of moving average. If you see that the market is below the moving average, then take a sell entry. I say again, when the market goes above the -20 level and goes down again by breaking the -20 level, if the market is below the moving average, then take a sell entry. Similarly, you can take buy entry like when the market goes down and crosses the 80 level, then you wait, and when you see it turn back and cross the -80 level from below, then you look at the moving average. If you see the market TS above the moving average, then you take a buy entry. I say again, if you see the market is above the moving average, then take a buy entry. Otherwise, don't take an entry. Hope you can follow this way.
We will make a request to you wherever you create an account, broker house, or payment gateway. You must use the FOREXBD link. This will keep your account safe at all times. You will be able to participate in any type of contest. You will have the opportunity to trade in 0 pips spread. So be sure to account under the link given below. And if you like this video, don't forget to click the like button, because your likes and comments give us confidence to do something better. And if you have any suggestions, you can leave a comment so that FOREXBD can meet your needs all the time.